If you're planning to move to Northern Virginia anytime soon, you might come across a little bit of sticker shock. In fact, you might come across a little sticker shock even if you live here. As of September 2021, the average price of a house in Falls Church, which is one of the areas I like to focus on, was $651,000. So you've probably been window shopping homes right now and you're wondering, how much house can I afford? Good Lord, can I even try to afford that? How's it going, my friends? This is Jeff Grannon with GPS Realty here with another shot of honest guidance. So you're going to want to do a little bit of homework on this stuff before you talk to a lender. You don't want to go to your lender and say, just run the numbers, because that's going to get you a hard hit on your credit report and drop your credit score a little bit. It's kind of jerky, but it's true. When you ask your lender just to run the numbers, what they have to do is take a look at your credit report. What you're telling the credit bureaus is that you want to get a loan, which means to them, you want to take on more debt. If you're wondering how much house you can afford, there's an easy way to spitball what your monthly payment is going to be. I use this with all of my buyers, and it's almost accurate almost all the time. I like to call this the 600 rule. You're going to use this in order to forecast what your payment's probably going to look like. What you're going to do is take the home price minus a few zeros and multiply it by 600. So for example, if you'd like to buy the average home in Falls Church at $651,000, you're going to take the number 600 and multiply it by 6.51. 600 times 6.51 equals 3906. So you can ballpark estimate that your payment is going to be about $3,900. And let's say you already know what your upper limit level is, so you have a ceiling. Let's say you already know that you don't want to go over $2,800. You already know that 600 times 4 equals 2,400 and 600 times 5 equals 3,000. So you're probably somewhere in between the $400,000 and $500,000 range. Realistically, probably 480 something. It's just a quick and easy mental math way to give a good guess at what your payment is probably going to end up being. Now the real numbers will come straight from your lender and you'll know what they are well ahead of time. But it never hurts to have a good idea what you're looking at before you go in. Now, what actually goes into your payment? Your principal payment consists of 4 things. PITI. That's principal, interest, taxes, and insurance. The first 2, principal and interest, are the obvious ones. That's the amount plus the interest that you're going to pay. Then you got taxes. The reason taxes are paid by your lender is because the lender knows they're second in line to the state if you should fall off the planet and stop making your payments. They make sure that they pay your taxes for you so that they make sure they get their money. And then finally, you have your insurance, which is the homeowner's insurance policy. It's usually not a very big number, but it's included in that payment anyway. It's in your lender's interest to make sure that you have homeowner's insurance so that if a tree falls on your house after you've been foreclosed on, at least they'll have something to fall back on. I hope this was helpful. Feel free to DM me. Check me out on Instagram, GPS Realty DC. It's the same handle as my YouTube channel. Give me a call directly, 703-996-9734. And head on over to my website at gpsrealtydc.com to take that easily found number you just came up with and surf for houses. Thanks for watching and have a great day.